Like any good house, it needs to have a solid foundation. If it doesn't, then it's just going to fall over as soon as the wind blows, as soon as things get a little rough. It's just not going to withstand. So that's the logic here. I want to lay a firm foundation in your L2 understanding. That way you can have a good, firm grasp, because as traders, it's not always going to be clear skies, birdies chirping, rainbows and unicorns and lollipops and all that stuff. It's going to get rough at times, but when you have a solid foundation, that's what's going to weather the storm. So even if you think level twos and have a firm foundation in terms of the basics, still just watch this video. There's always something you can learn. And heck, you've paid the money, we're hanging out, so don't diss me like that, don't disrespect me like that. I'm trying to be your buddy. Let's just bear with me, watch this beginning video, and hopefully you'll still be able to pick something up. But we really need to establish a firm foundation, firm, steady, and strong understanding. That way, like I said, when there aren't unicorns and rainbows, we can still have a good, strong thing to stand on in terms of keeping us grounded and keeping our eye on the prize. The obvious question, it's got to be the first question: what is level two? Maybe you are somebody that had a trader you read somewhere on the internet. If you're not trading with level two, you're trading blind, and you saw this course, Mastering Level 2. Hey, perfect. I don't know what level 2 is, but I'm going to sign up for it. If that's the case, then here you go. So trader talk, this is going to be a theme throughout the course. This is just slang, how traders talk amongst themselves. It might be how you see things written on, social media or blogs or chat rooms, what have you. Just that way I want to keep you all up to date, on the lingo, how people are talking. Hopefully, 15 years from now, people are still talking the same way. I don't see it changing, but regardless, so trader talk. Level 2 is the same as I personally call them level or L2 just because I'm lazy and I don't like for my tongue to have to pronounce level 2. L2 is so much quicker. But L2, level 2 with a Roman numeral, the letter L with a Roman numeral 2. These are all different ways you can write it. Market depth, some people refer to L2 as that. Other people refer to level 2 as the book. But level 2, it can take various shapes. And if you've noticed, I'm trying to interchange level 2 and L2. I'm trying to be sneaky. Maybe I'm not doing a very good job of it. But I just want you to kind of get it associated in your mind that they're both the same thing. They both are referring to the exact same thing. So just keep that in mind. So I now have a question for you. How many prices does a stock have? If you answered 2 prices, then well done. I will put your cookie in the mail, and hopefully you can get it soon. It'll probably be chocolate chip and maybe a little bit stale, but it's still a cookie. Now, how do they have 2 prices? We'll get to that. But the thing that a lot of people don't understand, when I first got started, I had no idea, was when you go to a website and you pull up, the stock quote, they're just giving you level 1, meaning they're giving you the last price that the stock was traded at. So here's an example, but this is not the price of the stock. This is very, very misleading. It's the most recently traded at price, yes, but as far as the current price, very misleading because all stocks have 2 prices, and that's what L2s is all about, showing this market and showing the 2 prices and how they interact with one another. And this was a picture taken of me. If you read the comic, I thought it's halfway funny, but I'm easily entertained. So keep that in mind. Prices, or a stock has more than one price, or stocks have 2 prices. Now the reason level 1 and those stock quotes are so misleading is because it doesn't lead you to the right question, or as I call it, the golden question. The golden question as a trader is, what price can I actually buy and sell shares at? The price that you see on level 1, that may be the price that you can buy or sell at. Keyword being may, or it may not be. There may be another price that you can sell for. So that's the key as traders. We get shares, but now we need to know what price can we get them out at. Level 1 may be showing us the price we can, or it may not. That's why level 2s are so important, and that's why people that are trading without them are blind, because it's not the real price that they're seeing, and they're almost trading a step behind. So L2s is essentially like behind the scenes of a movie. It's going to give us insight into the interest or lack thereof of a stock. It's going to show us the supply and demand of the stock. It's going to show us what traders, management, financiers are all doing. It's going to show us when a good time to buy and sell is. And bottom line, like I said, it's the slogan of the course. You are partially blind without L2s. You can still make money. That's why I don't say you're totally blind. Because even a blind squirrel finds a nut. But partially blind because you just don't understand all these different behind the scenes. You know, you're seeing the movie, but you're not seeing what's going on to make the movie. And in our case as traders, we want to see what's going on to make the movie. We really don't care about the movie. We need to get behind the scenes. And luckily there is a tool that exists. And say it with me, that tool is level 2. So that's why we need to be using L2 in all of our trading. So that's what it is. It's just a look behind the scenes. It's letting us kind of peek around the curtain and see what's going on. In its simplest form, the stock market is just one massive auction. The only difference is instead of some auctioneer up on stage, you know, rambling off, it happens even quicker than those guys can talk. In fact, it happens, you know, I'm not going to put million times faster. I mean, why is that the case? Well, there's just very few people anymore. It's all computer code and algorithms, supercomputers, all that stuff, a lot of black boxes, just all sorts of stuff going. It's all electronic, and it's a very fast-paced market. However, at its core, it's simply an auction. That's all the stock market is, and that's what we're trying to deal with. That's what we're trying to interpret. That's what we're trying to make sense of. So the question now is, well, how do we keep track of this fast-paced electronic auction that we call the stock market? And hopefully you said with level 2s, and notice how I put 3 exclamation points there. So hopefully you said it with some authority and with some excitement. But that's how we make sense of this auction. You know, again, and I don't mean to keep going back to this, but I want to drive it home. Level 1s, that's why they're misleading, because as you're going to see, they don't show you anything. They show you nothing about the auction other than what the last price was, but there's so much more to the auction than just what level 1 quotes show you. So level 2s, I mean, they really do open up a whole new world, and that's what we need to see. So level 1, very, very, very surface deep of the auction, but level 2s is the auction, and it's showing everything that's going on with the auction. The auction has 4 quote-unquote building blocks, and these 4 overall areas are the stock, the buyers, the sellers, and then the deals. Now, successful traders, and that's the point of this course. That's why you bought the course. You're investing into yourself to become a successful traders. All successful traders understand how these 4 blocks come together and build either a firm or shaky foundation. And now both have pros and cons, and we'll get into that as we go through the course. But you just need to know that these 4 blocks, they fit together nicely sometimes. Other times they don't fit together. Sometimes it does look like this picture where somewhere on the ground. But that's what level 2s is showing us. It's all about how are the blocks fitting together. Are they fitting together nice, or are they fitting together something like this? The nicer they fit together, the better, or the lower risk we have. So the better our risk versus reward. The more that are on the ground and it's kind of jaggedy and doesn't quite come together in a nice cube, that's the higher risk. So, but what's going to build or not build is going to be how these 4 blocks all interact with one another. Again, the actual stock, the buyers, the sellers, and the deals, pros and cons, but we're going to be covering all that throughout the course. The first building block is just the stock. This is the security that is the focus of the auction. It's represented and designated by its ticker symbol. Some examples, Apple, AAPL, Amazon, AMZN, Google, GOOG. Tried to pick companies that I feel will be here from here on out to the next 20 years. But that's what the stock is. It's just simply what the auction is focused on. It's the center of attention. It's what the spotlight's on. It's what everybody is talking about. The buyers, pretty straightforward. Now, trader talk, the buyers is known as the bid. So if you've ever heard people say, some blah, 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 the bid, all of a sudden, that's what they're talking about. They're talking about the buyers within the auction. Now, the buyers come in 2 forms. There are motivated buyers and then partially motivated buyers. We'll get more into this, but right now, like I said, just establishing the foundation. So again, the bid is where the buyers hang out. However, the buyers, there are 2 forms, motivated and partially motivated. The next is the sellers. Trader talk, the ask. So whenever you hear somebody talking about, the ask this or the ask that, it's not asking a question. It's asking in terms of they're asking for a price. So they are the sellers. They also come in 2 forms. There's motivated sellers, and then there's partially motivated sellers. And then the deals. The deals is the tape. The tape is the trader talk, and that's where you see everything just unfold. You see the size of shares being bought and sold, and you see the rate that the shares are being bought and sold. So it's just a bunch of deals happening. We'll get more into it, but that's what the tape is. It's just showing all the deals and agreements that are being made for that specific stock at the auction. I'm a huge believer in the concept a picture is worth 1,000 words. So I'm going to use this picture and we're just going to build more and more on top of it. So this is phase one of the auction. We've covered these things. Let's just go over them again. First is the stock. So in this case, we have a nice little painting over here, but for use your imagination, picture this as a nice stock certificate. So this stock is being sold. You have sellers at the auction. These are the people up here. So there's a seller. They are, remember, Trader Talk is the ask. If that's what you said, good job. And the buyers are, if you said the bid, good job. So you have the ask, you have the bid, and then you have the stock over here. And then I guess if you wanted to call this kind of the tape showing what deals are being made and you know, what the rate and all that stuff, you could say that. But the one bad thing about a picture is there's no audio. So there's the tape you can't see here because, you know, the tape is what's you know, being said between these two people. But we will get to that more. But just know the stock, the seller, the ask, the buyers out here, the bid. That's where a picture stands. That's phase one of the auction. So now maybe you're thinking, wait a minute, Clay, what are you talking about? I've bought stock before, but I've never had to go to an auction or anything like that. Fair point. So who actually goes to the auction? Well, excellent news. It is not you. When you sign up with an online, hopefully it's a discount broker, you are actually hiring a representative. That's all you're doing. You know, so when you see the commercials on TV, the Super Bowl commercials, you know, ads online or in the newspaper, magazines, whatever, all they're trying to do is say, hire me as a representative. That's it. That is what you do when you hire an online broker. You are saying, look, I don't want to go to these auctions. I just want you to represent me and, you know, get my shares or sell my shares or whatever. So the representatives for you. So in other words, you are the boss and you tell the representatives what to do. They come in three forms. There are market makers within the trading community. These are usually, especially in Pennyland, they are referred to as the MMs. You'll always see it as the MMs. I remember for the longest time, I was like, what is this MM stuff? I kept thinking like M&Ms, like the candy, but it was just, but MM, that's what it's referring to, a market maker who is a representative of you. So let's say that again. If you're taking notes, write this down. An MM is a representative of you. And because they represent you, you get to boss them. You are paying them. You're paying, every time you pay a commission, that is what it goes towards. It's saying, hey, look, I know you're representing me. I'm paying a commission, so go do your job. I want you to do this. So that's what the MMs do. They are your representative. Another form of representative is ECN, otherwise known as Electronic Communication Network. We'll talk a little bit about those. And then there's wholesalers. You know, lots of the online brokers will, you know, they'll have order flow go through these, and then they execute the trades. But that's really too, you know, it exists. It's kind of just there as an FYI. You know, that doesn't really have any effect on, you know, how we can use things as traders. I'm going to be focusing on MMs, but at the end of the day, remember, an MM, we are their boss. They represent us. They make it so we don't have to go to the auction, which is very nice of them, but they're not that nice because they are charging us fees. So, you know, that's it's not like they're just totally being nice. We pay fees, whatever your commissions are, that's what it's going towards. So you don't have to, you know, go down to Wall Street and you know, get shares yourself. You know, they're doing the dirty work for us, but you're telling them what to do. And I'm harping on this point because I'll talk more about it later. But you know, a lot of people like to blame MMs for stuff, but people don't understand that they're just representing people. They're being bossed around. They're being told what to do, so they're just doing what they're told. So let's go back to our picture here. Now we're on phase two. So I had told you that, you know, there's the seller and then the buyer. That's you and I. However, we're not actually there. Our representative is there. So there is a representative for the seller, and then there is a representative for the buyer. Who are these representatives? If you said market makers or ECNs, good job, question answered perfectly. That's what's going on. So there is the next layer here to the auction picture here. Phase two. We are at the auction, but we're not really there. We're there in spirit with our representative. I guess that's the best way I could put it. So that's what I'm trying to show here, is that we are there, but we're not quite there because we're paying somebody to go there for us. I guess that's the best way to put it. We're paying with our commissions somebody to go to the auction and represent us and do what we want them to do. So who is all at this auction? We understand that we don't have to go. You don't have to go. I don't have to go. But who all is there? Well, I mean, it's you name it, they are there. If there's somebody is interested in that particular stock, then they are going to be at the auction being represented by somebody. So there's going to be retail traders. Whenever you hear retail traders, that's you and I. There's going to be hedge funds. There's going to be mutual funds. And there's going to be everybody in between. But the main three are going to be retail traders. They make up the majority. I mean, people just want to buy and sell. And then you might have some bigger players as hedge funds and mutual funds. Not necessarily on penny stocks, but I'm not really talking pennies. Just trying to build overall concept here of what this is. So don't take the course and just say, hey, Clay Trader said that there's mutual funds and hedge funds always on penny stocks. That's not what I'm saying. I'm just saying for level twos, who is at the auction in general. It can be anybody. So that's what I'm trying to get across here. I mean, you have all sorts of pictures. You have sweet grandma. You have a very professional looking guy. Have another guy with a bunch of monitors. You have a guy that lives in his van. Have a nice little couple there. And then this, I'm not going to reveal who this is quite yet. If you've taken one of my other courses, you'll definitely recognize the name, but I'm not going to tell you who that is quite yet. Phase 3 of this picture now. So we know that there's buyers and sellers there. However, we know that they're not there they're not there physically. They're there in spirit. So in spirit, here are all the people that the sellers, the representatives are representing. You got grandma, this guy, the professional, but then out in the crowd, the representatives are these people. So it all started obviously with just, sellers and buyers. Yes. Who are these buyers and sellers? These are the buyers. These are the sellers. However, they're not there. Their representatives are there. So this is phase 3. This is kind of how things are going. These people want the stock, but they're not physically at the auction. And if I'm going a little too fast, then just pause and look at the picture and just visualize the concept that I'm trying to get. Like I said, a picture's worth 1,000 words. So just stop and think about it. I know I'm kind of going through these slides relatively fast, but just pause, look, and just see what I'm trying to get here. So I hopefully it's clear, but I just want to say there's no rush. You don't have to keep up with me. The pause button is your friend if you want to just pause and visualize. Visualizing is highly encouraged. So you've heard me talk about bid, ask, and tape. You know that the bid is where the buyers are. However, the bid is also where the partially motivated buyers are. So keep that in mind. When we say bid, these are buyers who want the stock. However, they're just partially motivated. There's no guarantee that they're going to get any shares. And in order to become a buyer on the bid, they are using what is known as a limit order. Maybe you've heard of that before. If not, a limit order is saying I want to buy, but I'm only willing to buy at this price. So that's where the people out in the audience are sitting. They have an order, but they're just partially motivated. They'd like the stock, but they're not willing to pay premium dollar for the stock. The reverse is true for the ask. Remember, the ask is where the sellers are, and they're also partially motivated. When you're sitting on the ask, you want to sell, but you're not in a hurry. You're not super motivated. Yeah, you're willing to sell, but you're not just going to sell for any price. You want to dictate the sell. So there is no guarantee that your shares will ever be sold. And again, for that order, it is a limit type order. And then the tape, I've already kind of alluded to this, but that is where the deals are being agreed to. That's just a running flow of everything that's being, where hands are being shook and saying, all right, that's a deal. Okay, that's a deal. And that's what the tape is showing us. And as far as those order types are concerned, it's anything and everything. So you could have limit orders, market orders, stop loss order. I mean, any sort of order that is available out there, the tape is going to be showing it. If there's an agreement happening, which is what happens whenever shares are bought or sold, then the tape is going to show us that. So phase 4 here, we're adding some more stuff. Up here, we have the ask. That is the people trying to sell. Down here, you have the bid. The people who want to buy but are just partially motivated, and just like these people up on the ask are partially motivated to sell. And then here, these are supposed to be sound waves. In between here, you have the tape. So there's, hey, I'll give you 50, 50, 50, 55, 55. Do I have 55? All that stuff. That's what's going on here. And when people are out in the bid saying, hey, I'll take that, sold. You got a picture. If you've ever been at an auction, that's what's going on. So the tape is just all the stuff in between here, the sound waves of everybody, bartering. It's just one massive bartering thing. There's all sorts of deals being agreed to out here with these sound waves, and that's what the tape is showing us. All right, so enough looking at picture. Let's look at the actual picture that really shows us the 1,000 words. So if you've never seen a level 2 format before, right here, this is L2. This is what it exists. going back to the introductory video, we're not going to always look at this format, but all level 2s, no matter the design, are going to be showing us this sort of information. So let's just take things down and break it down. So we have the stock. In this case, it is, Facebook. I guess one minor thing to note is they're showing us the company's name. They're not actually showing us the ticker symbol. So that will vary, because the ones I use show me the ticker symbol and the name. I'm looking around, I don't see the ticker symbol for it anywhere. Anyway, but that is the security that is at the auction. So now we know that this entire auction, all this other information, is for this stock of Facebook. That's what's going on here. It's the Facebook auction. Now, in terms of the bid, over here you can see the bid. In fact, this level 2s even says the bid. Remember, these are the people out in the crowd. They are the ones that are partially motivated. They want to buy, but they want to buy at their price. Over here you can see the ask. So these are the people up on stage. They want to sell, but they're also just partially motivated. They want to sell, but they want to only sell for the price that they want to get. And then you can see all the different prices. You can see all the different prices over here that they're willing to buy. Now, the one thing to note is there's no more faces. Sorry, that picture of Sweet Grandma is no longer here. The reason there's no more faces is because who represents us? The representatives. So over here you can see on this level 2s, they call it the MMID. So the representative ID, you could look at it, is here are all the representatives. Here are all the representatives of people that want to sell, representatives that want to buy. That's all we get to see now. And then over here you can see the tape. These are all of the deals and agreements that are being made. We're going to get into all the components of the deal here later on, but just know that over here on level 2s, this is where all the kind of the transparency, I should say. This is where all the sense of the market happens. So you got the, hey, I'll give you 25, 25, 26, 26, I'll get another, all that stuff. This is what's making sense of all that, gibberish of people talking. In our case, it's all computerized, but you get the point. The tape is making sense of what's going on in terms of what agreements are being made. Because remember, every buy must have some sort of seller, and every sell must have somebody that's buying. So every transaction, there's two parties involved, and that's what this is showing us over here, the two parties and what they've agreed to. So let's talk more in detail about the tape. In the previous slide I hinted, we'll talk more about what components go into these agreements and deals. So let's take a look at some details. A deal has 4 parts, and these are the 4 important parts that we need to keep in mind and pay attention to, when we're doing our risk analysis and stuff like that later on in the course. So the 4 important parts. The first is, what is the price that the buyer and seller agree to? If a deal, whether you're selling, a sack of marbles or, a house or, some apples or some pottery, you're going to need to have some sort of price. I mean, I'm stating the obvious when I say that. No different for stock. So that is the first part of the deal, is what is the price. And here on the tape, you can see right here, labeled very nicely, is the price. So it's telling us what these deals were arranged at, and what price they were agreed to between the two parties. The next is the size of the agreement. So in other words, how many shares were exchanged. So here, very nicely labeled again for a size. Here is how many shares were exchanged, just all the way down. So here's a pretty big deal. 3,100 shares were exchanged, 100, 190, 1,010. So there is kind of an odd shape, 130. So that's what this is showing us over here. The size of the agreement. And then the time of the agreement. And this is important because it's going to tell us the rate of speed of which deals are being made. That may not seem too important right now, but that's actually very important. You can't see it here, but over here is the time, and that's something that's showing us, it documents, okay, at this time, this agreement was reached, the agreement had this price, and it was for this many shares. That's what that's showing us. And then finally is the location of the agreement. So that's going to tell us who initiated it, and in this case, it's all about the color. So in this case, red means that somebody up on stage sold to somebody out in the audience. If it's green, it means somebody in the audience said, I'll take it from somebody on the stage. That's all that means, is where was the shares bought. Green means they were bought from the people on the stage. Red means they were bought by the people out in the audience. Off colors, not going to worry about that. It's just, to me, I mean, it confuses me if I'm being honest, but it really doesn't matter. The point is, when you see shares being bought from people on stage, that's what you want to see. When shares are being bought from people out in the audience, it's not quite what you want to see, depending on your perspective. I'm probably getting a little bit ahead of myself, but just understand that when you see green, and most level 2s will have this, but green, actually, let me do this. Green means what? And I'll give you a second to answer it. Who is being purchased from if the order is green? Okay, if you said the people on stage or the sellers or the ask, good job. Now, if it is red, who is being purchased from? They're being purchased from the people out in the crowd, which is the buyers, which is the bid. So that's how that all works. Maybe this is a little confusing, but it'll totally make sense as we go on. But just know that the location does matter. If a bunch of people are buying from the people on ask, that is telling us that a lot of people must want those shares. However, if people are selling it to the people out in the crowd, that's telling us that not many people must want those, because all of a sudden they're willing to sell out to the people in the crowd. That's just the important thing to remember about the location of where the agreement has been made in terms of the deal. All right, our foundation is now complete. When I say level 2s, you know that L2 is just simply a stock auction. It's how we make sense of the stock auction. You know who is a part of the level 2. You know that it can be anybody from grandma to the guy that lives in the van, to hedge funds, to mutual funds. That's a part of it. Everybody. The people that are interested in the stock, that's who is a part of that particular level 2 auction. Now, who shows up to the auction? Please don't say you or I. The representatives show up to the auction. Remember that. So the MMs go to the auction because they are the ones who are either trying to buy or sell shares for us. We know a lot of trader talk. Sellers are the ask. They're up on stage. They're the ones who are partially motivated. Buyers are the bid. They're out in the crowd. They want to buy, but they're not super motivated. So they're just kind of out there, seeing if anybody wants to sell to them. And then, of course, the components of a deal. Again, the size of the deal, the time of the deal, the size of the deal, and then where the deal takes place. I think I got all 4, but we just covered it. So rewind and check me and check your notes, see if I did them all. But remember, when people are buying from the people up on the stage, assuming you are along, that is a good thing. If you're long, but then everybody's starting to sell out to the people in the audience, or they're selling to people on the bid, that's not what you want to see. So from this point forward, we're going to begin to build on this knowledge that we have. You have a good rock solid foundation. You understand all these things. You understand that level 2s are just a very useful tool to make sense of what is actually a pretty crazy auction of terms of people wanting to try to form agreements of what price to sell or what price to buy their shares at. So that is where level 2s are. That is what they're showing us. Now we need to start to build on top of that and take it up here to the next level, pun intended.